I want to talk to you about the best cash management accounts you can actually contemplate this year. So here's a review I want you to pay attention to. First of all, when we talk about cash management account, what are we talking about? Well, you have an account that offers a combination of services that really mimic a checking and a savings account in a single product, and often with minimal fees, if any. And the best CMAs actually offer you checking account features like a debit card and proper checks, a higher interest rate on savings, and FDIC insurance beyond the normal limits. So here are the top 5 CMAs that you need to really contemplate this year. So number one, you have Fidelity Cash Management Account. And so when you think about the Fidelity, you have an annual percentage yield, APY. You'll hear this a lot throughout this show. So APY, on average, you have a 2.72%. So that's really good. There is no monthly maintenance fee, and you have the fact that you have more than 1 million ATMs worldwide when you have the Fidelity CMAs. So Fidelity CMAs actually allows you as a holder to get fee-free access to any ATM with a Visa, Plus, or Star logo by using their Visa branded Fidelity debit card. If you are charged a fee by the ATM provider, Fidelity will reimburse you the amount of the fee on the same day it was debited, though you may be charged a 1% foreign transaction fee for an ATM withdrawal in another country. And Fidelity charges no monthly fees for its CMAs, and it does not have a minimum deposit requirement to open the account. And the mobile app actually offers a number of convenient transaction options, including free mobile check deposit and free bill pay, making this, in our view, an excellent option for account holders on the go. And Fidelity also provides unlimited check writing with real paper checks for customers who are a little more old school. So that's really cool as well. Okay. So Fidelity's APY is a 2.72%, as I said a little earlier, making this a very competitive product with other CMAs. And the brokerage offers some optional features unlike what you will find in other cash management accounts. For instance, Fidelity's optional cash manager feature allows you to set up maximum and minimum target balances, as well as a minimum transfer amount and a certain listing of your funding accounts. And when your CMA actually hits the maximum target balance, Fidelity will alert you so that you can move the excess money to another account or invest it. So that's really cool. Now I want to talk to you now about another account, Aspiration Spend and Save. So this is another cash management account. So when you think about Aspiration Spend and Save, you have an APY up to 3% on balances up to $10,000. And now there is a monthly maintenance fee. So Aspiration Plus will charge you anywhere from anywhere up to $7.99 per month or $71.88 annually. In terms of ATM network, you're talking about more than 55,000 ATMs. So Aspiration is really a socially conscious investment platform that focuses on environmental sustainability. And so Aspiration Spend and Save provides a debit card, access to more like thousands of free in-network ATMs, and the reassurance that your deposits will not fund fossil fuel production. And so Aspiration offers 2 accounts, the basic Aspiration Spend and Save, and then the Aspiration Plus. If you opt for the basic account, Aspiration only asks you to pay what is fair for your monthly maintenance fee. This is what is fair is really subjective though. This means you can set your fee as low as $0 if you choose, although the platform encourages account holders to truly consider what they think is fair. With the basic Spend and Save account, you can earn 1% APY on balances up to $10,000, which goes down to 0% APY for balance portions above $10,000, so long as you spend at least $1,000 per month. If you spend less than $1,000 per month, you earn 0% APY with the basic account. Now, Aspiration Plus offers an impressive 3% APY on balances up to $10,000, which goes down to 0% APY for balance portions above $10,000. But if it really comes with a few caveats. There is a $7.99 monthly fee that cannot be waived, although paying the fee annually rather than monthly reduces your cost to about $5.99 per month. And signing up for the Plus account only guarantees you a 0.25% APY on balances up to $10,000 unless you also spend at least $1,000 per month, which qualifies you for the 3% APY. So on balances above on balance amounts above $10,000, you earn 0.25% APY. And what I want to say is that on this account, additional perks include cashback on purchases from Conscious Coalition members, retail companies that align with aspirations, commitment to social consciousness, and sustainability. So that's really good. I mean, you have a vast program there. You can expect 3% to 5% cashback with a basic account of with a basic account 3% to 5%, or 10% cashback with a plus account. And the plus account holders will also receive carbon offsets for all gas purchases and one out of network ATM fee reimbursement per month. So that's really cool. The third account I want to share with you here is the TD Ameritrade Online Cash Services account. And here the APR is a little lower though. You're looking at 0.35%. Of course, the good thing is that this account has no monthly maintenance fee, and there's no limit in terms of ATM network. So there's no limit in terms of US usage. So TD Ameritrade's Online Cash Services account comes with unlimited check writing, online bill pay, a free Visa branded debit card which can be connected to Apple Pay, and unlimited ATM usage, including reimbursement for any out-of-network ATM fees incurred in the US. And the platform's bill pay service allows you to set up recurring payments for added convenience. And this is kind of cool. Now, notably, TD Ameritrade's cash management accounts are part of its suite of services for brokerage customers. So cash management accounts at the TD Ameritrade require a brokerage account to access. So this is actually one of the requirements that we don't like, because they are forcing you to become a brokerage client. Okay. Now, TD Ameritrade offers a FDIC insurance for up to $500,000 per depositor, which is on the low end for cash management accounts, though it is twice the amount of insurance you can expect from a traditional bank or credit union. So let me give you the pros and cons of this service here. The pros first. You have unlimited ATM fee reimbursement for out-of-network ATMs in the US. You have a free online bill pay and free unlimited check writing process, FDIC insurance for up to $500,000 in deposits, and no monthly fees. What about the cons here? Well, the mobile app does not offer bill pay access through web browser. You have a low APY, and you must have a brokerage account to access the cash management account. You also have Betterment Cash Reserve. So when you think about Betterment Cash Reserve, I want you to think about the highest APYs that we have seen. So you have up to 5.5%, and there is no monthly maintenance fee, and there is no ATM network here. So the Betterment Cash Reserve account offers customers up to 5.50% APY after meeting activity requirements for the 3 months for new customers, then earn 4.75% and no monthly maintenance fees. So while you do need to deposit at least $10 to open a cash reserve account, there is no other minimum balance requirements, and you can let your accounts go below $10 with no penalties. And the cash reserve account is set up like a high yield savings account. If you want to get the benefits of a checking account, you will need to open a Betterment checking account to accompany your reserve account. And Betterment's cash reserve account allows you to set specific savings goals within your account. So that's what we love a lot in terms of the best cash management accounts. And so you are able to separate your money into targeted buckets. So the buckets are really cool because it allows you to really reach your financial goals a lot faster. And so account holders can set up automatic deposits for each of their goals. And that said, the only way to deposit money into your reserve account is either via electronic transfer from a separate funding account or via wire transfer. So because Betterment does not charge for wire transfers, but the originating bank may do so, there is no option for mobile check deposits. Additionally, deposits and withdrawals will take 1 to 2 business days, depending on when you request them. And unlike other cash management accounts or traditional checking accounts, you cannot get immediate access to the money in your Betterment cash reserve account. However, there are no limits on withdrawals, as there often are with high yield savings accounts. This is kind of cool. So bottom line here is what? Since this account has fewer options than other CMAs that incorporate checking accounts services automatically, This will be a good fit for customers who need a savings and invest in vehicles, and that is less convenient to access. So this is kind of cool, and this could be an excellent choice for someone who is trying to be more disciplined about their spending. So in terms of the pros here, no monthly fee or minimum balance requirements. You have FDIC insurance for up to $2 million or $4 million for joint accounts, and deposits for cash reserve at Betterment's program banks. And you have goal setting options with automatic deposits. So that's really cool. In terms of cons, you have a cash reserve account that does not come with checking account features, and you must electronically connect funding accounts to make deposits. So, it's one of those things where you have to see what really works for you. Next, I want to share with you Wealthfront cash accounts. So when we talk about Wealthfront cash accounts, we have a cash management account that really gives you a high APY. You are looking at 5%, and a monthly maintenance fee of there's none, and the ATM network has more than 20,000 ATMs really. So the Wealthfront cash management account is a CMA that can help you reach your savings and investing goals. The platform allows you to set a maximum balance that you want to keep in your account. And when the platform detects that you have at least $100 more than your maximum, it will automatically transfer the money into one of your targeted accounts. So you can set either monthly targets, such as $500 per month, or balance targets, such as $20,000. So once you have reached one target, Wealthfront will automatically start on the next target in your list. And the cash account comes with a Visa branded debit card, as well as a fee-free access program for 19 to 20,000 ATMs. You also get mobile check deposits, up to 2 days early access to paychecks you direct deposited, and the ability to connect to Apple Pay, Google Pay, and peer-to-peer payment apps. Though you can pay bills with your cash accounts, Wealthfront does not offer a bill pay service like we may find with other CMAs, and Wealthfront directs account holders to set up bill payment by using their cash accounts routing information on their creditors' websites. Otherwise, you can use your debit card, or you can have Wealthfront cut a check. So that's totally cool. However, the send a check option is only available for customers who have held an average balance of at least $2,500 over the past 60 days and who have direct deposited at least $250. Okay, so that's really good. So you have the flexibility there. And while Wealthfront charges no monthly fee, you can expect some service fees. So this include a $2.50 out-of-network ATM fee on top of the ATM owner's fee, a $2.50 bank teller fee on top of the home bank's teller fee, a 2.75% international transaction fee, and a fee of up to $5.95 to make cash deposits at participating retailers. So let me talk to you a little bit about the cash management account. So how do you actually choose the best cash management account for you? Well, it really depends on what you're looking for. First of all, you want to look at APY. APY is kind of important, right? So is it 1%, 3%, 5%? You want to look at the fees they're charging you, because if they're giving you a lot of cash in terms of APY and they're taking it back in terms of fees, that's not really a good proposition for you. So you want to also look at the minimums for you to qualify for the APY they set for you. What kind of minimum should you really reach? And what about the digital experience? So do you care about mobile apps? Do you care about doing your mobile banking? Do you care about electronic banking in general? What kind of ATM network you want to have? So the ATM network size is kind of important. Do you want check writing capability, for instance? Okay, if you want that, you're gonna have to think about other propositions, if you will. And what about the FDIC insurance limits? Do you care about that? I mean, you have some players are giving you $1 million in FDIC insurance limit. Some are giving you $500,000, and this is way more than the $250,000 that you usually get through banks and credit unions. So basically, specific characteristics taken into consideration will really will have to deal with your specific situation. Okay, so what are we talking about here? Are we talking about cash management account? What are we talking about? Think about an account that acts as a combined savings and checking accounts that earns interest and has options for investing. And cash management accounts are managed by brokerages, robo-advisors, or other non-bank financial institutions. And they make it really possible to manage cash, checking and savings account, and investments within one institution. So this is really cool. And cash management account, as you saw a little earlier, they offer higher FDIC insurance coverage than regular checking and savings accounts by keeping money in one or more partner banks. And this makes cash management accounts ideal for holding large cash balances. This is kind of important to think about. And so a cash management account works like a combined checking and savings account. So you are going to really you don't need a lot of cash though. I mean, it's all about the strategy that you want to have. Okay, so to actually use a cash management account properly, you have to see what really fits your specific situation and your family situation, so to speak. Okay, but what we love is that you have a higher interest rate than many standard checking and savings accounts. So that's really cool, just to start with. So to actually choose a cash management account, make sure that you pay attention, as I said a little earlier, to APY fees, the FDIC insurance, the account services. The account services are really important. You also want to think about customer service and investment services. Now, when we talk about account services, do you need your cash management account to mimic a checking account, or do you need it to offer you more savings or investment options? So depending on what you plan to use your account for, you will need to pay close attention to the services offered, such as debit card access, online bill pay, fee-free ATMs, and automatic saving and investment tools. What about customer service? This not only includes access to customer service representatives when you need them, but also the usability of online tools and mobile apps. And we talk about investment services. Yet now, choosing a CMA that is offered by a brokerage you trust or have an existing relationship with can help you find the right account for your needs. It really depends. Now, when we talk about CMAs, cash management accounts, there are alternatives. Okay, basically, you got to ask yourself, what do you want? Let's talk about cash management account versus checking account. Now, both checking accounts and CMAs can handle your daily money management. They include features like a debit card, check writing privileges, and the ability to pay bills and receive direct deposits. However, checking accounts typically end there. They may earn modest interest rates, but they are not meant for much more than everyday spending. On the other hand, CMAs serve other purposes. For example, CMAs tend to earn higher interest, provide seamless access to your investment accounts, and offer FDIC insurance beyond the normal limits. However, they may come with higher minimum deposits requirements and require you to open a brokerage account. What about CMA versus savings account? Well, CMA and savings accounts both earn interest. Both CMAs but CMAs also have features typical of a checking account, like check writing abilities and a debit card. And plus, savings accounts often have transaction limits, while CMAs may allow for more flexibility. And so because CMAs are held by brokerages and robo-advisors instead of banks, it's easy to move money between your CMA and investments. CMAs can also provide a higher FDIC insurance limit than a typical savings account, so they may be a better place for balances over $250,000. However, high-yield savings accounts tend to offer higher rates, so if you're not planning on investing or tapping into your savings regularly, they might be a better option for you. So this is kind of, those are things you should think about. Long story short, your money is safe. So your money is safe in a cash management account, not a problem, because even though CMAs are offered by non-bank institutions, which FDIC insurance does not cover, those institutions, they offer. What happens here is that those institutions that are offering CMAs, they partner with FDIC insured banks, which is where the account money will be swept every evening. This means that cash management account holders can get more than the $250,000 FDIC insurance maximum per depositor for each ownership category, up to $2.5 million, depending on the platform. Thank you so much for your attention. Here is the bottom line here. In today's conversation, I spoke to you about the CMAs, the best cash management accounts, And let me do the review here. Number 1, Fidelity Cash Management Account. Number 2, Aspiration Spend and Save. Number 3, TD Ameritrade Online Cash Services. Number 4, Betterment Cash Reserve. And number 5, Wealthfront Cash Account. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.